Cheers.
Cheers.
Thanks for
Thanks
coming
for
on,
having me.
Patrick.
Sorry, I'm such a
Shh, you're
pain
not.
in
Don't
the
even
butt.
say it. You're not. You're not. Don't even go
a
there.
little prima donna in the beginning there. You know, when you start getting more big wigs like us on, you know, I just kind of don't laugh at that.
Everyone's a bigwig in my book.
Right.
I love it.
That's what you got to say.
I love it.
Yeah.
So I'll do my best to introduce you and say what you do. No titles though.
Well,
Actually, introduce yourself so I don't get it wrong.
Okay. So I'm Patrick Morehead, and I work with a group called Quiver Financial. And the reason why we had the
finance guy.
Yeah. The reason why I wanted you to hold off on what it is that I do is because people are going to turn off the channel. Because 90%, I would say...
Don't turn it off.
Yeah.
Don't turn anything off.
90% of financial advisors are shit.
Okay.
And I want to try and open their eyes to what a real financial advisor kind of should be doing.
So it's sort of like
clients.
it's sort of like a woman who had a horrible dating experience with a dude, and now she hates all dudes. And you're the dude who shows up and says, "I want to open up your eyes and show you that not all dudes are shit."
That, or a friend of the woman, or whatever, however your story went there, is spreading rumors that, okay, this is bad, this is bad, this is bad, and they hear horror stories, and they're just like, okay, you know, not ever again. But when I tell people, you know, I'm in aviation or I'm a pilot, they're like, oh, you know, that's so interesting. And so that's how I usually start the conversation. You know, I'm a pilot. Oh, hey, you know, and then I kind of segue into other aspects.
And you're also a pilot.
I am also a pilot.
You're also
that's
a
why
pilot.
I say, yeah, I don't lie about that.
You've done a lot of things in your life. So let me ask you this before we get into other stuff. I'm assuming I know you spoke with more people in your life about financial advisors and about finance way more than I ever have.
Mm-hmm.
So you probably have more ability to back up the fact that most people think they're shit. And I totally believe you.
Right.
I agree with that. I mean, when I think financial advisor, I think of someone who is looking out for their benefit probably more than mine. Doesn't mean it's true.
Or making money off of you type of
Right.
thing. Yep.
And it doesn't mean it's true, but that's sort of the image that comes into my head.
Right.
Is that the reason most people think they're not good, or are there reasons that I potentially am not thinking about?
I don't think it doesn't come down to the person, you know, that's not necessarily good. It comes down more so to the organization. You know, when you have these big box houses, you know, if you want, I can name them, you know, but it's your kind of general thinking when you think of finance of who it might be. They're in the business to make money.
Right.
So most advisors only have access to what the business is that they're working for.
Mm.
So if that business tells them, okay, you need to sell these mutual funds, you need to push these stocks right now, you need to do this, you need to do that, they don't have a whole lot of leeway to do anything else. Not only that, but their education and their outlook on the whole financial world is very limited too. Like, you go to school, you learn about it, you learn about finance, you know, all that type of stuff. That's great. But once you get to the real world, you know, when we teach flying, we talk about the training environment and the real world environment. They're two separate things. It's the same thing in finance. You have what you learn and what all the numbers are and all that type of stuff, but then you have what happens in the real world and what's going on that's going to help benefit you as a real person trying to navigate this, you know, shitstorm, like you were saying earlier. You know, why is it so complicated? And I don't think that's done on purpose. The tax stuff, which we'll get into, why that is maybe a little more purposely convoluted, but the finance is really straightforward. It's easy. And most financial advisors are stocks, bonds, mutual funds, annuities, that type of thing. That's all they push. That's all they can offer. And I know that this is the case because client after client after client that I get, and when I initiate a conversation, I don't even talk about that because I know every 99% advisor is already pushing that to them. So it's not going to do me any good to try and break in to talk to you about stocks, bonds, mutual funds, and annuities.
Right.
One, I hate those things.
Right.
Two, everybody is pushing that. So they're not going to listen. They shut down immediately.
And half the people don't know what they mean.
Stocks, bonds, mutual funds? No, most people do.
You think so?
Stock and bonds, like everybody knows what that is.
You know what, though? Call me crazy. I think if we lined up 10 people, I hope I'm wrong. If we lined up 10 people, although you'll know better than I do because you talk with them about this, I think 5 out of 10 people would not be able to explain to you what a bond is without Googling it. Like exactly what it is.
I don't know. Maybe I've been in the industry for too long, but
I think
no,
stocks people would be able to. I don't know. Maybe I'm wrong.
They don't know how they correlate to each other or how they interact with each other. And you have the 60-40 split knowledge that goes around and all that type of stuff. But I think most people kind of understand, maybe not the full nuances of what a bond is. And because most people, when you say bond, they might think of treasuries. They might not think of corporate bonds or all that type of stuff.
Right.
But most people kind of have a generalization of what a stock and a bond is. Now, an annuity, nobody knows what an annuity is. And most people that are selling annuities don't really know the intricacies of an annuity. They're just selling the annuity because they get paid a shit ton. So that's what I'm saying, that it's in the benefit for the advisors, and why a lot of people don't like them is because they're making the money. And they're selling this annuity, and for some people, annuity is good, and it does work out, but it has to be very specific to their needs and what they're looking for as far as risk averse and all that type of stuff, because in reality, I would say 90% of the people it just does not fit for, and it's not a good fit for
Interesting.
people.
Interesting. Okay, so I know I interrupted your introduction of yourself. So basically, so you have a lot to do with finance.
Mm-hmm.
You're one of the more successful people that I know when it comes to these kind of stuff, which I know little about, which is why talking with you is pretty cool. So let me ask you this. Let's go back to the beginning. Take me to Patrick as a kid. I want to get to know you a little bit.
Patrick as a kid.
Yeah, and
I don't know if I want to talk about Patrick as a kid.
Is it that painful?
I was a fat child.
Oh, you're a weight loss child.
A weight loss child? No, because it wasn't until high school.
So you didn't always know you were this good looking.
Yeah, right? No, yeah, it wasn't until I went to college that I rechanged my image, because I wanted to get some freaking girls, and it wasn't going to happen with me being as big as I am.
It's funny you say that. I was talking with one of the guys, John. He's a 747 pilot, and I believe he said that his reason for getting into flying was girls.
Yeah.
And so we got talking how unbelievable it is how the world has women make the world go around. Think about it.
Mm-hmm.
If I took women out of no women anymore, nightclubs gone, beach gone. Why would you go to the beach? For the sun, the water? No one cares about that. A few people do. Parties gone. Other than the occasional, I want to hang with the guys. But generally speaking, if you think about taking women out of the equation,
I disagree. I think a lot of things would still happen. What I think would go diminish, and it's me being a finance guy, is flowers go away. Dinners go down.
That too.
Because guys are not spending all this money to get the girls. So our economy would shrink, I feel like, more than anything.
It's close to nothing. Guys still need to eat, but the food, I think it's a good word. The economy would shift so dramatically if you took women out of the equation, which you don't think about every day.
Yeah.
Which is amazing. The fact that we have women and men makes the economy what it is, which is crazy.
And why did we go down that rabbit hole?
Because you lost weight for women.
Oh, okay. Yes,
so I said
right.
women,
okay.
And I was telling John too, women are to thank for probably most of what dudes do in life.
I would say he's probably 50% women, 50%, because most pilots, if you ask them, when did you know you wanted to be a pilot? They're going to say when they're 10. When they're a kid. So, right, I mean, that you don't know about women back then other than you want to throw dirt at them type of thing.
I'm with you.
Yeah.
So, okay, so you grew up, where'd you grow up?
Minnesota.
Okay.
You can't hear it in my voice? My O's and my A's.
I heard something. I was thinking maybe Canada.
Yeah, I know.
Minnesota.
I want to punch people that say that. Minnesota, yep. Yeah, so at the time when I moved out here, I was working for a small business in Minnesota. We were selling aircraft parts. And
you're how old?
I don't even know.
Approximately.
Because I went to the airlines after college, and that was 22, 23 type of thing.
As a pilot?
As a pilot, yeah.
So you got your ratings in college?
Yeah, I got my private as a kid, and then I went to college, got the rest of my ratings, and then after instructed at the university that I went to.
North Dakota?
Then, yep.
Nice.
And then went to the airlines, was at the airlines for a little bit, got hit with type 1 diabetes, so it kind of made me revamp my whole life. So after that, Floundered around a little bit to figure out what I wanted to do.
How difficult was that to? I'm assuming you wanted to be an airline pilot. That was a dream.
Well, and at the time, looking back on it, it's they say things happen for a reason.
Right.
So I mean, I was miserable. Regional life is just horrible. Most people that talk about
The lifestyle.
regional pilots, it's just bad.
Right.
So I was miserable, anyways. But it was what my dream as a kid of what I wanted to do, And I double majored in college, business and aviation for a backup, just because it was good sense. I never thought I would use it.
And you happened to major in something that has to do with finance.
Right.
Because you were into finance too, or because you just said, what the heck?
Because, it was like, what the heck, type of thing.
Fascinating.
So,
Look at that. How kind of worked out for you.
Right. And then, so I got it. It was life-changing, obviously, because it was, it crushed me, not being able to do it. And I didn't realize nobody taught me again. We'll probably get into this, but like, people don't teach finance in school when that should be 100%. People don't teach enough real-world life type of things. I was never taught about the insurances that you can take out on your certificates. So I could have taken out insurance on my pilot certificate, my medical, all that type of stuff. And when that had happened to me, I probably would have been set, because I would have been able to collect on the unemployment, the insurance that I had been paid on. Knew nothing about that.
Dude,
so,
how many? I think most pilots don't know anything about that.
After the fact, it was probably 50-50, I would say. That I would talk to some, be like, I know about it. It's like, I know about it, but I don't want it. Or I know about it, and I already have it.
I didn't know.
Or
this.
I have no idea, about it.
Okay.
So, so that would have, benefited me. But I didn't have that. Fell back on my business degree, worked for a small business company. And back to the story of why I moved out here. I was driving a pickup in Minnesota, stuck in the snow on a freeway, digging with a shovel, trying to dig my pickup out of the snow because there was so much freaking snow that I couldn't move.
In Minneapolis.
And as I'm doing it, I'm like, what the heck am I doing here? Why? Like, there's no reason for me to be here dealing with this.
Right.
And that's when it just clicked. And that summer, I moved out here. It was either Colorado or here. And I had a woman here, so I'm like, okay, fine. Women again, back to that women conversation.
Thank you, women,
yes,
for developing this incredible
Although
thing.
not thank that woman. That ended quickly.
But she had a part. She had a part in where we ended up.
Yep.
That's incredible. So what was in Denver? Another chick?
No, I just always wanted to live in Denver. I had buddies in Denver, so it was the network type of thing. Moved to where I had a network and where I still thought it was beautiful to kind of live type of thing. So
gotcha. So you come out here, and this is post-diabetes, no more airline.
Mm-hmm.
So after the airline, the whole thing, you're driving your pickup in Minnesota, and you go, what am I doing here? And you move to LA, and you come out here, and you don't have a medical.
Correct. No, at that time, I had a medical. An aviation medical.
Yeah.
But only a third class.
So you couldn't do first class of the airlines.
Yep.
So you come out here, no clue what to do, but you do have a finance degree.
Oh, no. I have, come on, you know me better than that. I always have a backup plan. No, I had a job moving out here. Like, okay. I was moving out here, but in the process, I had jobs lined up.
Got it.
So
it
was another small business, aviation small business company that I worked for. And from between then to getting to where I am now, it was kind of just a slow progression of a bigger role in these small businesses, helping with their NOI, helping with, them build their business because they were small businesses.
All aviation related.
All aviation related until I got full into finance. But I met my finance kind of guru educator, teaching him how to fly. So we would, I was instructing him, learning, and he was teaching me as I was teaching him. And the more and more he and I got to talking, I'm like, dude, this makes total sense. Like, it just clicked.
What did he say? If you're not specific words, what was it about all the things he said that you think made it click for you?
It was just the education aspect of it. He talking about taxes, talking about, utilizing insurance, talking about estate planning, asset protection. Like, it was just the full gambit of everything. We never once talked about stocks and bonds, and it's why I don't, because it just makes more sense to people. And not only that, but like I said, it's everybody gets taught stocks and bonds. But yeah, he was just teaching me about, well, if you do this, you can do this. And if you're set up this way, you can do this. And it's just like, wow, like why am I just learning about this now? Like I could have been, way better off in my life if I had, skipped aviation, skipped all this, and just started doing that.
Right.
And it just clicked. So immediately I'm like, dude, I want to work with you. Like how do I do that? I went and got all my security ratings, licenses, all that type of stuff to get it done. And immediately just started working under him to get mentored to figure out how I could build this. So
did he, throughout your conversations, allude at all to why these things, in his opinion, are not taught in school?
No, I mean that's
You never talked about that.
His brain is way too out there to come down to that granular of a thing. Yeah.
So he doesn't really care why not. He just like, here's the facts. We need to learn.
Well, he cares why not, and that's kind of why he started it, because he's, he could just do it for himself, type of thing. We could keep it all internally and not educate people, but that's not benefiting the greater good. If you benefit somebody else, it's going to come back and circle. It's why we don't have minimums, for people that invest with us or things like that, because, I could meet you and you could have $100 to your name. All right. And I'll take you on as a client and guide you and help you and do all that type of stuff, because you might have 2 friends. Your mom might be, have money, things like that. It comes back full circle. If I benefit you and you start talking to me, to your friends, it's going to eventually come around, because they're going to learn about these things. I met with clients today where I met with a client and he had a buddy there. And, as I'm talking to him, I just kind of offshoot and talk to his friend a little bit about certain ideas and strategies. And both of them, I taught them a new strategy today, and they were, at the end of the conversation, they were still talking about that strategy, the fact that they were shocked that what it was. So, and that it's, in the tax code and able to do that. And, if you want, I could talk about it today if you want to go down that avenue, but that's a tax strategy. So
there's so much to unpack here. It's fascinating. So what it sounds like, beyond the specific financial stuff you do, there's a lot of dealing with human beings and people.
And that's why I think I'm not to be biased, or whatever, but I feel like I'm good at it. And it's partly because of the airlines. When you're a first officer at the airline, you have to be a chameleon. You have a guy sitting next to you every leg, potentially every flight, that's got a different personality. And you two are going to be with each other, potentially for a couple hours to a couple days. So you got to get along with that guy. Whether he's an ass or the greatest person on earth, you got to get along with him. So you have to kind of change your mentality and your personality and stuff like that to mesh, and so that you guys get along for the next couple of days. Whereas he doesn't need to do that, because big macho captain type of thing, So I think that, doing that for a while helped me. When you sit down and meet with somebody, like, you have to mirror their personality, right, their aspects, what they're looking for, in life. You can't force anything on them. You can't force opinions on them. You just have to take what they want in life, what they're looking for, and you relate, you adapt it to them. And I think the airlines helped me kind of do that a little bit more when I sit down with people.
That's a very interesting observation. You basically have to take who they are and work with it.
Right.
Because that's all you have.
And you have to control emotions. It's an emotional industry. These are people's lives, that they spent their entire life building their, wealth bucket. And now they're trying to release a little bit of it to make other things or learn about other stuff type of deal. So it's a managing emotions type of, psychology type of mentality that you have to take with them as well.
There's a lot to it. So basically, if someone wants to do what you do, they could do it even if they have like little to no human being skills, but it will make their job more difficult.
Potentially, depends, what type of company you work for and sector and all that type of stuff. Because, like I said, because we're a smaller firm,
right,
it's much more interaction.
Right.
Whereas you work with the big box houses, it's maybe just answering the phone or sending an email type of thing, and they can do that, no interpersonal type of thing, or they're just writing an article that might go out and release to help guide people.
Fascinating. So before we move on, in when you came to LA and then what happened, just because we're talking about this human being thing, I'm really curious, because I know very little about your industry. I've heard numerous times, like if you talk, for instance, with veterinarians, right? Actually, it's funny. If you talk with doctors or people who otherwise would want to be an animal doctor who decided not to, you'll find, and you'll find many of them will say that they would have loved to work with animals. But when you're a vet, you're not really working with the animals as much as you're working with the animals' owners.
Mm-hmm.
And that's what they don't want to deal with, right? And it's no different than like a children's doctor.
Right.
Are you working with the kids or are you dealing with their parents? You know what I mean? It's one of those things. Let me ask you this. Are you dealing with the people's money or are you dealing with the people?
It's one and the same. I mean, because they're interconnected. I mean, I wouldn't say that I enjoy actually dealing with the people. You know,
like that.
When you light up their eyes, or when you succeed for them, you know, there's an enjoyment aspect with that. The money that's maybe your stigma of the financial advisor, because a financial advisor goes beyond money. It goes beyond the money you're investing for them. It goes beyond the money that you're receiving to provide the service, whatever it may be. So it's I would say it's more of an interaction with the person, and the money is maybe a byproduct, but they're linked, because if you don't handle the money properly or handle their estate or any of that type of stuff, it's going to blow back on them as a person, and they're not going to like you anymore. So
if you want to get into finance, you would tell people you better be okay working with people, because that's ultimately what you're going to do.
Well, like I said, it's dependent on the sector. You know, if you're working for a box house, you know, no, not necessarily. You don't have to
deal with the
right.
Yeah.
Now, granted, when you become the chief investment officer or things like that, that's all about the money. You know, there is no people associated with it. Yeah, there's people that are tied to that money, but if you screw up, you're not going to get the blowback, you know, unless it's a huge screw up, then the company's just going to fire you. These people are never going to know, you know, what you did or who you are, type of thing. So,
right. Fascinating. Okay, so you're in LA, you show up, you work at aviation related stuff, you meet this dude, you teach him how to fly. He starts enlightening you and opening up your world as to all these stuff you wish you learned in high school.
Mm-hmm.
And you didn't. And you say, I want to work with you. So how do you start working with this guy?
Like I said, I got my securities licenses and all that type of stuff done, so that I could actually do this on a person-by-person basis, insurance licenses, all that type of stuff. And then it's out meeting people and building a relationship with people to get them to trust you, because it's still, for me to get paid, you know, I can teach about taxes, I can teach about, you know, insurance and annuities and bonds and all these stuff out there, estate planning, asset protection, but most of that I don't get paid on. I only get paid on when I do invest money or when I do manage funds, is really when I make money. So I can do all that education, but eventually it takes time to build and bring all that back, because people are like, okay, hey, you saved me this on taxes, now let's go and invest that. So it's just building the relationship and building over time, because you can't just, okay, it's not like he gave me, okay, here's, you know, $100,000, go invest it and see how good you are. That doesn't, in my sector of industry, that's not how it works. It's not like that. So, it was just learning what he does, learning from him, relaying that information and talking to people about that kind of same style and information to get them to wake up and realize it. We would do a lot of seminars too, where you entice people by free food, you know, and 99% of the people are just coming for the free food.
Absolutely.
But it's our job to then convert, you know, at least 1, 2, 3 people in that, you know, crowd of 50 that what we're doing is different. And so you get, you know, 50 people that show up and they're all just there for the food. I mean, I've had people get up and walk out with plates, you know, at the end of it of food and things like that, like not even wait for the doggy bag, you know. So we would do our presentation first and then give them the food, but then you're just trying to get people to wake up. And that's most of the time it's only 1, 2, 3 people in the room that like really understand what we're trying to do and what we're building for clients. So, I mean, that was another way that we built my book, you know, was initially doing those type of things.
Totally. So enlighten me. When I don't know, take anything, I'm just trying to think as how someone in your position makes their money. When I go to a surgeon, they charge a fee to perform surgery. I don't know what cuts go where, but he makes his money and he goes on to the next surgery. Someone like yourself, you mentioned managing funds and things like that. Mm-hmm. How does that, is that similar to like a real estate agent where you get a percentage? of a deal or of
when with the investable funds, yes. So it can be one of two ways. And for me now, it's called assets under management. So it's a fee based on assets under management. But prior to kind of recent, it was one of two ways. It was commission based or assets under management. But recently we've shifted to mainly just assets under management. So whatever the value is, we get a small percentage, usually below 1%, that we charge the client to do those type of things. And that's typical across the board for most financial advisors. They're making a 1% on whatever assets you give them to invest.
So it's whatever assets I give you, not the appreciation of any of them.
No, have you ever heard of Fisher Investments?
No.
Their big thing is when you do better, we do better. So when it appreciates, yes, they get more. It's still the 1%, but think of $100,000 you start with turns into $200,000. Well, that 1% grows too. So their whole, Fisher does a great job marketing, because that whole thing, you do better when we do better, sounds great, but that's what 99% of advisors do anyways. They just it's a flat fee under certain things. Now, some of the big, box houses are a little bit different because like you can go out and you can open a Fidelity account on your own. Don't talk to anybody. Just go to Fidelity, type in all your information, and open an account. And on the surface, it looks like you're not paying that asset under management fee. But where they get you is, one, they call it sweeps, and you can have only so much cash you have to have in your account. So if you deposit $100,000, they're not going to necessarily just let you invest that $100,000 right away. They take some of that and they go and throw it in their bank, and then they lend on it. So that's how they make their money on the backside. So you're not really seeing any fees on that but they're making money on it. So that's how they're kind of generating some income. Then on the other portion, they only give you so many options to invest in. You get ETFs, you get mutual funds. They let you, depending on some type of an account, they let you do stocks and things like that. But that's where that sweep balance is a little higher if you do direct stocks. But most of the time it's ETFs and mutual funds. Well, those ETFs and mutual funds are the box house ETF and mutual fund. So they put it together. So inside there, they have management fees. So you're investing $100, let's say. Well, that $100, there's fees that are charged on that. You just don't see it with the way that they report the gain and loss and all that type of stuff. There's turnover fees, there's asset fees, there's all this type of thing that are going on within that. So the growth that you actually get with inside that is not a true indication of what you're paying for that growth. So that because they're so mass, they can manipulate the system a little bit more. So anytime you're investing anything, one, I always tell retail investors, you're the last to win. If a stock goes up, you're the last one that actually gets paid out or benefits from it. There's many people in front of you that have already taken their profits and won. And two, you're paying fees. No matter where you're investing, there's fees that are going out the door that you're paying. There's just no way around it. You can't be in the financial system this day and age and not pay some type of fee.
Right.
Now, I'm not saying that it's standard across the board or it's all equal, but you're paying a fee. I mean, that I think is the other biggest delusion, is that they think that they're not paying a fee. Or I'm going to manage my own. I'm going to open a Robinhood account. You're losing in Robinhood too. Like that's that whole controversy that ended up happening of them front running all the purchases and all that type of stuff. So you're not getting the price that you should get when you purchase it through Robinhood, because there's 20, 30 other people who are in front of you buying it before you buy it. So they benefit. Stock goes up, they sell out. So it's a small deal, but it happens, and no matter what you do.
It's funny you say that, because I actually recently heard there's like this famous saying, goes something like, if you think college is expensive, wait till you find out how expensive no college is, something like that. Basically to come and say that sometimes things that cost you a lot of money are actually overall the cheaper route than not doing those things.
Yeah.
And
sometimes, some
things.
Yeah.
I'm not saying I agree with that with college, but just like you get the idea. So when you talk about, or just in general, and I think about myself, when it comes to like financial stuff, I know for a fact that regardless of how much having someone manage all these things that I know little about might cost me, at the end of the day, it may very well be the cheaper way out than me trying to do it myself.
Potentially.
Potentially.
Because that's kind of my whole, intro at the beginning is not all people in the industry are the same. By you just giving money to a financial advisor and they're only investing in stocks and bonds and then charging you an asset under management fee, that's stupid. If all they're going to do is build you this portfolio of stocks and bonds and mutual funds or ETFs or whatever it may be, and then charge you an asset under management fee, that's not smart.
Why?
Because you have just as good what makes you better at picking stocks and bonds than me?
Maybe the trends of the market.
So yes, when you're in it a little bit, it's like when I always tell people when when your car breaks down, you don't fix it yourself because some things you just can't, right? You don't understand.
Right.
Stocks, bonds, and all that type of stuff. The stock market is a casino. That's all it is. You got the CNBC and the talking heads that are talking, well, the earnings are this and book value is this and all that type of stuff. It doesn't mean shit. The price of the stock is what a person is willing to pay for it. So if it's pumped out on CNBC or somebody says that I'm shorting this or if it's talked about a lot, it's going to have a lot more movement. And there are some technical guidelines that you can kind of watch and see, okay, hey, maybe this isn't the best time to be buying right now because of all these technical, aspects that are coming out. But that can change. Just because the technical charts are saying this, something could flip, especially in this day and age. I mean, when you look at Reddit, what happened with that whole debacle. Things can just happen.
In case I don't know what you're talking about, what happened with the Reddit debacle?
So hedge funds got mad because what they do on a regular basis, there's now these guys who were financial professionals
on Reddit.
Yeah, and they just pretended like they were just regular trading guys, but they just started a trend of talking about things, saying, hey, let's buy GameStop. Let's do this. Let's do this. Let's do it. And it started snowballing and catching traction. So GameStop, nothing happened on what they did on a regular basis. Their business model was tanking and all that type of stuff. But because it was trending and people were like, oh my God, yeah, look. I mean, yes, people were shorting it. The hedge funds were shorting it. So that's why they were going after it. Because it's like, okay, the hedge funds are trying to win, type of thing. And we're going to, win instead. But the fundamental aspect of the company did not change. So the stock price shot up because all these people bought it because they were seeing they were screwing over the hedge funds. So that's what I'm saying. It's a casino. It's all about what type of mentality is going on for that specific stock. So when I say what makes you better at picking than me, yes, I have a little more knowledge in that regards. But just because I know all the technical charts, I feel like this is doing this, I got the experience and everything, and I say, okay, we're going to buy here. That might not happen. It might tank. It might rise up and go down. So my luck or odds of doing that are just as good as yours. With maybe a little more experience in the back end. And that's where the long-term aspect, you hear about long-term investors and all that type of stuff. The long-term, yes, it's better to work with somebody because they're going to, maybe see things that are not. Case in point, current market conditions. We've been sounding the alarm for a while, talking about inflection points. We've been on a 13-year bull run. It's maybe a good time to start taking some chips off the table. So in that regards, we're giving you guidance in that way. It benefits you. But if all they're doing is putting you in, target date funds, putting you in mutual funds, all that type of stuff, it's not benefiting you any more than you going in and doing that same type of thing. You going out and opening that Fidelity account where sure, they're making money off of the mutual fund fees and all that type of stuff. It's going beyond just doing that type of stuff where a financial advisor adds value. And that's kind of what I was getting at, at the topic. It's if they're just going to give you, because you could come to my office and if I was in the big box houses and I could give you, your report saying, this is what I recommend for you. And it's 20 different mutual funds. Well, guess what? The person after you, I'm going to pull out the same report. I'm going to put on the file, put their name on it, be like, here's what I recommend for you. That's all it is. It's what they do. So, and that's the stigma that people need to get by. It's in my opinion, it's better if you're going to go to, a big box house, I would say just put the money, open a Fidelity account, and put your money in the Spider Index. And
Spider Index.
Yep, the SPY. And just let it ride. and not, again, this is not a recommendation to, buy stocks or anything like that. I'm just saying you're just buy and hold type of deal. You're going to perform better than somebody who is trading stocks for you or buying mutual funds, selling, and kind of manipulating your portfolio. It's been, statistic after statistic that does better than somebody actively managing your portfolio. But if you need something bigger than that or want to learn more beyond that, going to a smaller kind of financial firm is going to have a little bit more options.
Smaller rather than the big
big box houses.
God, let's see if I even know the names. You just said it. Fidelity? Is that a name?
Did I say one?
I think you
it
said
probably slipped out. Yeah.
Spider something.
Well, the Spider. Yeah, that's a name of a
index.
Yeah, an investment. Yeah. But yeah, you got Fidelity, you got Morgan Stanley, you got Edward Jones, you got Vanguard. They're all the same. It's all the same.
Is there a difference between the big and smalls other than size?
Again, it depends. Typically, yes. But then there's the small firms out there that are just mainly stocks, bonds, and mutual funds.
Which is what the big boys do.
Right.
I gotcha.
But there's most of the small firms understand the value of other things. And they might not, teach about insurance, teach about taxes, teach about estate planning and asset protection, but at least they're going to give you a little bit more of kind of options than just the Fidelities, the Edward Jones guys.
Totally. So you just said a few moments ago, you were saying we're on a 13-year bull run, right? Meaning we've really had, financially, in the markets, we've been doing really well for a real long time.
Yep.
And the longer we're in it, the longer it's been since we remember what it was like to not be.
Right.
And human nature dictates that the longer we go on from something, the more we tend to forget, the less we remember how to even deal with things that it may have been a minute since we dealt with them.
Right.
As a financial dude, talking with your clients or even just for yourself, what would you say is the proper, I know there's probably not one, I'm assuming this is a question, if I ask 10 financial people, I get 12 answers, I think. But speaking with you specifically, 13-year bull run, market's really good. Let's say there's a kid who's 20. 13 years ago, there were 7. So they don't even know a world in which the markets were not good. How do you tell someone to prepare for a potential world in which things might not be what they are right now?
Well, a 13-year-old kid, it's not going to affect them, too much.
Okay. And why not?
Because they don't have any money. They're not making any money. It's their mom and dad's money that they're potentially going to inherit and all that type of stuff.
Will the fact that they're young mean that their recovery time is great, meaning they have more time to recover than an older person?
Well, not at 13. They don't even have anything exposed. But yes, if the younger you are, if eventually we have a downturn, and it's not really an if, it's a when.
Got it.
And yes, this bull run has made everybody look at a genius. You could throw a dart at the board the last 10 years and you would have made money. That's how simple it's been.
Crazy, yeah.
And so this I wanted to talk about anyways, where it becomes a bigger deal for people is what we call the retirement red zone.
Ooh,
and when you think about in football, it's that last 20 yards, right? Well, for us, it's really 10 years. It's 5 years before and 5 years after retirement, because those are the most crucial times. You're approaching retirement, getting ready for retirement, thinking about retirement, want to make sure all your finances are buttoned up. Your risk changes dramatically in that time period. So if we have a downturn during that first 5, period, or we lose 20% in the market or whatever it may be, that might extend your retirement. Who wants that, right? So that's why that first 5 years is crucial. 5 years is a hard, not enough time usually to make something up if we have a huge downturn.
Right.
Now, the pandemic downturn that we had, I feel was a precursor, but that came back much faster than anybody could have predicted. You're going to have people out there that are talking, oh, no, we saw this coming, blah, 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 the bullshit. So that before retirement is important. Then you have 5 years after, because you retire, you don't want the next day lose half of your portfolio, use 20%, 10%, whatever it may be, because you're counting on living for that.
Right.
And people are always like, well, how much money do I need in retirement? Well, there's so many variables with that. Like, you can't answer that with just a 5-minute conversation. Like, there's so many variables with how much money do I need in retirement. So that 5-year period after is crucial, and your risk changes. Once you get a little further in retirement and you kind of see how things are going, how you're spending, all that type of stuff, then you can make, your changes. But so that 10-year window is really...
And because of that, you're really thinking only somewhere around 5 years into retirement, because by the time 5 years rolls around that you've already been retired, you get a pretty accurate idea of what your...
Well, that, and you have Social Security, your pension is potentially full coming out. You're now on, Medicare, or however your insurance is going to happen, for that 5 years after. So a lot more things kind of trigger in that time period, depending on when you retire. So that it's a crucial time for your retirement, for planning purpose, all that type of stuff, for when to happen. So that's what we really focus on. And we kind of target those individuals because nobody's really paying attention to those individuals. And a lot of people get complacent. The 10-year, 13-year bull run, people are getting complacent. They're forgetting, about their portfolios and the fact that we can lose money. People last week have been waking up because we've had a lot more volatility, and it's volatility to the downside. So, there's still your talking heads that are saying, oh, we're going to all-time highs, we're going to do this, and nobody knows yet. We're still in the precursor of a potential bear market. We haven't fully blown into it yet, but we're not.
And for people listening, bearish is basically
down,
not good.
Right.
And then bullish, a bull run, like we were saying, is good.
Right.
It's a good run.
Yep.
From your perspective, how much do you devote? You specifically, or just people in your shoes, how much do you devote when you deal with clients to reminding them, or maybe to just making it present in the conversation, the fact that we could not be in a bull run forever? How much does that play into
once they're a client, it doesn't
really play.
happen. Yeah, because they're keen to now the reality of what they have available to them, the tools at their disposal, and all that type of stuff. It's beforehand. It's and it's why I don't talk. When my initial approach is taxes. I'm not a tax attorney. I don't do taxes, anything like that. But I have some knowledge that can guide people to then I connect them with the right type of tax people that I know are doing the strategies that we talked about and how it can be implemented. So that kind of opens their eyes to things. And then we start talking about, okay, hey, look at this chart. I had a client, she was young, gave me her portfolio that a typical advisor puts them in. They were mutual funds. They were commission-based mutual funds. So the advisor was making a pretty good, money off of these mutual funds.
And this
which is
like
ridiculous.
A big Morgan Stanley type thing.
It wasn't Morgan Stanley. It was, I don't remember the.
It was a big firm.
It was a bigger firm.
Got
Yes, it was a smaller firm, but she worked for the bigger firm. And I showed her. She had probably 10 different mutual funds, and I took all those mutual funds and I put a graph for each of them, because they don't show you the performance of each one. And you could overlay all the graphs and they all looked the same. They had, the same, anytime the market downturned, they all went down, so there was no diversification in there. Not only that, but they all had, and the reason for that is because they all had the same stocks inside that mutual fund, and most of the stocks are the FANG, which is Facebook, Amazon, Netflix, Google,
what is it? FANG?
FANG, yeah. Facebook, Amazon, Netflix, Google. I'm missing one.
I love it. You guys have acronyms.
But they control, 35% of the market. So most of these mutual funds that they have are going to have those stocks because they've had the growth, they've had the technology.
But there's no diversification.
Right. So they give you 10 different mutual funds saying I'm diversifying you, but it's not doing you any favors.
Because it's all similar to each other.
Right. So that's waking people up that way, being like, hey, look at my portfolio and what do you have me in? Is this really doing me any good? And most of the time it's not. And that's kind of my starting point of, hey, look at this. This is stupid. It's not, you're spreading your money out. You're paying them for a fee to do this when it means nothing, type of thing.
What in your opinion starts becoming I don't want to say accurate, but when are we starting, when it comes to stocks and things like that, what, according to you, in your opinion, begins to be considered diverse? Okay, so it's not Facebook and Instagram, but what if I claim that Tesla is a It's a high-tech company. So how do you look at those things in terms of diversifying a client's portfolio?
Correlation.
What do you mean?
So is one stock, how correlated is it to all other stocks or another stock? And most of the time, if it's a stock, its correlation is high enough that if we have a pullback in the market, 10, 5, 10, 15, 20%, whatever it may be, that stock is going to pull back too. So true diversification needs to have zero correlation to the stock market.
I like it.
So that's where, bonds potentially can come into play. Real estate, loans, there's many more things that can come in and have zero correlation to the stock market. So if our economy is humming along like they say it is, okay, but we have a pullback in the stock market because of tensions overseas, whatever it may be, our economy should keep chugging along, right? So if we have things outside of the stock market, they're going to keep chugging along. And that's where the diversification actually plays in. If you just have 20 different stocks, one in healthcare, one in energy, one in, technology, you go on forever, it's not diversification, because the analogy that the guy that I learned under, his was, if you drain the ocean, all boats still go down.
I like that.
And that's the same as the stock market. If the stock market plummets, all stocks are going down.
I like it. If you drain the ocean, all boats go down. But if you impact the shipping industry, the yachts are still sailing.
How? There's no water.
No. I'm saying if the problem is the drainage of the ocean, everyone go down. But hypothetically, if the problem becomes, let's say, shipping, container ships, let's say there's a stop on that. Well, if I'm in a yacht, I could keep going.
Right.
So depending on what the problem is, we'll sink everyone or just specific ones.
Right.
And that's what you mean.
Right.
Interesting. I like that. So correlation. The less one is tied to the other when shit hits the fan, the better off I most likely will be.
Right.
Very interesting. Very interesting. So, Patrick, a little shift in what we're talking about. We talked about this off air, and I told you this a few times in our conversations. And we alluded to it a little bit with the fact that schools don't teach it. They don't teach these things. Why in the world, when it comes to, let's shift a little from stocks and stuff, but when it comes to like business stuff, LLCs, S Corp, I know all the terms. I'm telling you, I know all the terms. By heart, I could write a song about the terms. I know all the terms.
Was that because we already had the conversation about all the terms?
No, not even with it. Just like I've watched and I've listened to so many things talking about these terms, like S Corp, sole proprietor. I still can't say that word. All these different terms. Why in the heck does it seem to be so complicated? And I'm saying does it seem to be because it may not be. It may just be crazy me. What's all that about? If I want to, because hear me out. If I want to start a business, maybe I don't want to pay taxes, but it's inevitable. I'm going to pay taxes, right? If I'm starting an LLC, I'm starting a business, I'll pay taxes. I might pay more or less than I'd like to, but I'm going to pay taxes, meaning my business is going to contribute. If that is the case, wouldn't you want to make it as easy for me as possible? I'm going to help out, right? I'm going to give more than I'm going to take, presumably, assuming most businesses. I'm opening a pizza joint. I'm going to help out society. I'm going to pay some taxes. I'm going to pay rent. I'm going to generate some jobs. Wouldn't you want to make that as easy for me to make happen rather than complicated? What am I missing, in your opinion?
I mean, that can go down a rabbit hole, and that can go down a conspiracy type of thing and stuff like that.
So you're saying no one knows why it's so complicated?
Well, and I don't think it's necessary that it's complicated, and we brought that up. I think it's more so you can't teach something that hasn't been taught.
What do you mean?
So you have teachers right now that are teaching math, that are teaching English, that are teaching all this type of stuff. My father was an English teacher for over 35 years.
Okay.
How can you expect them to teach kids about business, about real estate,
when all
about
he taught
LLC,
was English,
when they were never taught how to do it? So until we break the cycle, and do an offshoot class, or type of thing, or outside of school class where you have a professional, somebody that's been doing it for 20, 30 years, come in and teach that outside of the English math, which is all fundamental stuff that needs to be taught. But do an offshoot thing or bring in a professional of somebody that's been doing it, it's never going to change. So that's where I'm kind of getting at. You can't teach what hasn't been taught.
So you're saying it's not a matter of complicating your opinion; it's a matter of lack of education.
Right. It's nobody that has done it. No business owner that's successful and everything is going to want to go and spend his time teaching kids,
right?
How to do that type of thing, because they're not. It's a poor use of their time. Business owners or people that are successful evaluate everything they do based on what is a good use of their time.
What's going to make me money?
Right.
It's funny
and them spending all that time on kids, sad to say, is not going to make them money.
Yeah, I was talking with a real successful person like 2 months ago, and he looks at me and he goes, "Yo, do you know how I see the world?" I go, "No, how do you see the world?" He says, this dude's married, wife, though, says, "Every move I make, every single thing I do, I ask myself, is this going to make me money?" Every single thing he does.
See?
And you can't blame him. You know what? That's his drive.
Well, and I have a client that I fly with all the time. Like, he owns an airplane and we go flying and we screw around all the time. And I analyze everything I spend my money on. Like, it's granular. Like, I take it to the ounce.
You specifically.
Me specifically.
Just that's how you are.
And he makes fun of me every single time because, I'll look at something and the price of that and compare it to the price of that. And I'll analytically, look at it based on a finance thing. Well, that's going to get me just as drunk as that. So I'll do that. And he laughed. He's like, okay, what's the price per ounce for that? Or what's, and he'll just make fun of me for it because I do. It's the same thing. What's going to save me either money or make me money when I do stuff. And
that's who you want your finance guy to be.
To some extent. But I like I said, I don't make any money on the education aspect of it.
Right.
It's me spending, it's me spending the time now and investing my time now, which potentially is making me money for a future payoff.
So you spending time talking about these things with a potential client is exactly what, say, a real estate agent is spending time with a potential buyer showing the house. They're not making money, but they're taking time out of their day for showings.
Right.
So that'd be the equivalent.
For the most part.
Would you say someone who
wants
to...
But they're still selling themselves. I'm not necessarily... I'm selling you on what you could potentially succeed in or what you could potentially do. So I'm educating you versus a real estate agent is selling themselves.
So that's interesting. So how much of what you do has to do with... You have to some degree, sell yourself. Because if it's not you, it's the next guy. I told you before, right. I don't know anything about these things. And I inevitably will hire... I don't see myself ever doing all these things myself. I just don't. And I don't mind admitting that. I don't think it's a fault. I think it's a strength to say, that's not my area of expertise. Mm-hmm. I'll source that out.
Right.
So if it's not you, it's the next guy. And if it's not the next guy, it's the next guy. On some level, if you want you to be the guy, you have to somewhat sell yourself.
I've been in sales. I've done that whole thing. I've never been good at the salesy mentality. My client gave me a story today. He's trying to buy a boat, and the boat was listed. My client loved it, wanted to buy it. Hey, I'll do it. Let's close the deal. It's done. The next day, the guy says, he was a broker of the boat. He's like, oh, the seller sold it, but here's 2 more. I can't do that because to me, that's the bait and switch. That's me lying to the client. That's me being a jackass. And I can't do that. And that's what sales people do. They might burn a bridge, but they, gain 5 more type of thing. And I'm more so of, my word is my bond. I try and do my best. I teach you, I give you all the information that I can. If it doesn't work out because you don't like my personality or we don't mesh or things like that, so be it. I can't change that. What you see is what you get. Mm. So I've never been good as a salesman. I'm going to tell you what I know, teach you, show you what I can do. If it doesn't work out, it doesn't work out.
So you believe that it's really the good sense in someone working with you that will ultimately sell itself.
Right. The information that I'm able to provide, my personality, my thought process, because for a lot of investing, it has to mesh. Like my thinking has to meet similar to your thinking.
Right.
So beyond that, I'm not going to try and, push something, it's all the time. I actually push clients back. It's like, it's not urgent. It doesn't have to happen right now. There's nothing in finance that has to happen today. If you're buying stocks, things like that, potentially, but again, you could be wrong. So in finance, nothing has to happen today. Look at inflation. Inflation's at 7%. But just because you have cash right now, it's not going to degrade that cash so much to rush it into some type of investment or rush it into something because you're afraid that you're going to lose out to inflation. There's always something that can come down that can make up for that type of deal. So there's never a has to happen right now type of mentality in finance.
Fascinating. So what would you tell someone to do right now in the moment if they wish to? Heck, what are you a believer in all people educating themselves on right now today, not waiting for tomorrow? What would you think by all people knowing the entire finance and people's personal finance would be much better? Is there one lacking thing, or is it the whole package, or is there what?
Yeah, there's not, because it so goes beyond just investing for finance that there's not one thing. I would say the most immediate thing is stop being complacent. The financial advisor that you've worked for 20 years, great relationship. I love that. Okay. I urge my clients to have more than one financial advisor. Okay.
This is interesting. I've never heard that. Why?
Because there's things that other people are going to know. All right. You can bounce it off of other advisors. Now, the problem with that is if one advisor says, no, that's too risky, or that's bad, or that's, that, without fully understanding it. So I would say having more than one person influencing your decisions, maybe not necessarily managing, or split it up, that type of thing. But there's no reason, we teach it, don't put all your eggs in one basket.
Right.
It's the same thing. Like, get more and more info than you can. You don't need to work with just one person. So these people that have had, financial advisors for 20 years, I would never leave them. They're my best friend, blah, blah, blah. That's great.
You do hear that, actually.
Oh,
people
my best
really
friend?
get
All
attached
the time. Yeah.
to...
Yep. And they think that they're doing everything for them. And they might be, but in my experience, they're not. There's gaps, there's holes. And with me, there's probably gaps and holes because you can't catch everything. And there's things that are hidden from, that clients hide and stuff like that. But there's more knowledge out there. And it's why I try to surround myself with a network of people rather than just me doing it alone or just me knowing, everything. Because there's
no way for even you to know it all.
Know. Right.
Everyone have their area.
Right. And the other aspect of it is CPAs. Okay.
Where do they fit in?
They fit in to do your tax return, and that's it.
That's it.
That's it. All they are is typing numbers into a system that spits out your tax return. They don't save you taxes. They don't look for ways to save you taxes. They don't know all the tax code and all the information out there. I have so many, and I'm no disrespect to CPAs out there. You guys do a thankless job. I would not want to do that too many numbers.
All CPAs watching this, comment now. Comment now on the video.
They just do not know all the tax code. It's impossible for one person to know the entire tax code. And that's what tax attorneys are for. They have a better understanding. I don't know if I should say this.
Think about it long and hard, because the entire world's watching.
Yeah, right.
This is viral.
I have connections in the world of IRS. Okay. You have two different sectors. You have the investigative, the criminal aspect of the IRS, and you have the auditing aspect of the IRS. Most of the auditors do a fairly good job. Like, they understand the tax code. They don't know, even themselves do not know all the aspects. Once you go to the higher levels, yes, they do. But when somebody's auditing you, they know the bare bones basics, because that's what most people are complying with, is the bare bones basics. So even the IRS does not know the entire tax code and what things really take place within there.
And that is how complicated the tax code is.
Right.
Why is the tax code this complicated?
It's a few different things. I'm drawing a blank on the name or the word. I'll have to edit this out.
I heard it's because... Oh, we're not editing. No, I heard someone once told me... Lobbyists. Yeah, exactly. Yep. Someone once told me, a really successful person. I asked them. I said, Well, actually, here's what I asked him. I said, why do tax loops exist? Like loops in the tax code. Why do they exist if it lets people get away with so many things?
Yep.
And he was saying that it's the Congress people or in Washington, lobbyists, whatever these people are.
Yep.
What's a lobbyist?
So, well, before we get into that, let's give an example.
Okay.
The California, the Uber and Lyft debacle. Okay.
What's the Uber and Lyft
Uber
debacle?
and Lyft, the state was saying that all your drivers are employees. Uber and Lyft were saying they're contract workers. They can come and go as they please. We're not telling them when they got to come.
And they do their
that
own
type of
taxes.
thing. Right. But the tax law passed that in most instances would require them to be employees. But there was a little carve out in there. So everybody, small business owner in California, no, you gotta have an employee, except for Lyft and Uber. You guys get an exemption, and you're now they can be 1099. So they throw enough money at Congress, and we'll let you slide. So that's what lobbyists are. The corporations get people, and they just go wine and dine and throw money and say, hey, we'll hook you up here, we'll do this, we'll do that.
And that's how the world goes round.
Right.
So this dude was telling me that the reason these loopholes exist is really in order to enable loopholes for the Congress people themselves. And the reason, I don't think that touched on why it's complicated, but basically he was saying that the reason loopholes exist is for the same people who make these things up and put these things in place for their own benefit. That's what he was saying. I don't know how right or wrong that is.
And I mean, until you know and you're in the room with what's going on, who really knows?
Otherwise, why would a loophole exist?
Because they're getting paid off. In my opinion, it's the corporation needs this tax strategy to happen. So they're going to, wine and dine, do whatever lobbyists do to go and persuade them, hey, we'll give you shares, we'll put you on the board, we'll do, this, and we'll do this and this. We're trying to make sure that this happens. Here's why it's good for our employees. Here's why it's good for the economy. Here's why it's good for this, to try and get it implemented into the tax code. So it's not necessarily for that politician or those politicians that vote for it, necessarily. They'll maybe benefit down the line because they have people that teach them how to take advantage of it. But it's more so for whatever corporation wants that tax loophole or that tax advantage to happen.
Is this the only country that basically runs that way?
I mean, I don't.
You don't know what it's like.
I'm not as versed into other countries.
We're
just as corrupt as any other country that's out there.
That's what I would think. I would think that it all works pretty much the same exact way. That there's lobbyists.
We just have more money and more things going on that happen, in this country, that's done behind closed doors versus other countries potentially.
Question: when out of all the people you come across and talk to about their finances, is there one thing that catches you off guard again and again and again that people actually get right, which you don't expect them to when it comes to their money?
No.
There's absolutely nothing.
That they get right?
Right.
I mean, well, that they're maybe doing right already?
No, something that you go, good on you for doing that.
Like that I didn't know about?
No, that you didn't expect them to be doing with their money.
Oh, all the time.
Oh, like what?
Yeah. I mean, it's because, like I said, it's a certain mentality that the clients that kind of gravitate towards us. So they're already kind of thinking in that
before
realm.
I forget, I know you have some notes and stuff. I want to make sure we talk about everything.
We'll get to it.
Yeah. I want to.
Yeah. Cool. They're already kind of doing certain things because they're wiser or opened up to more than just the stock market. So they already kind of have that mentality, and a simple thing is a trust. Okay, a trust doesn't benefit you as the person that's setting up the trust. It benefits your heirs who you're passing it down to. And people that have families and things like that, that's where it's like, okay, yeah, good. You went out, you spent the money, you got that taken care of because they care about their family type of thing. So I mean, that is kind of my biggest thing of paying attention to is okay, are you don't care about your heirs, or are you, okay, I care about generational wealth? And that aspect of it, I would rather work with, is the people that are thinking of generational wealth rather than, no, I'm not going to set up a trust because I don't care about, my kids, or I don't care about that. That shows me the mentality that's not out there that, or be to work with type of thing.
Interesting. What's something that people get wrong most of the time?
Like I said earlier, thinking that their CPA is out helping them save money.
Interesting.
When I give them, an investment, or we talk about things, or we talk about tax strategies, well, let me run that past my CPA. Well, here's two problems with that. One, CPAs are not, like we talked about, versed in the tax code and may not know it or understand it.
Right.
And two, what do you think the CPA is going to say if you bring them a strategy that they should have been doing for you for the last couple of years, and they realize that they should have been doing that, or they forgot about it, or didn't know about it and now are learning about it? You think they're going to say, oh yeah, that's a great strategy. You're going to turn around and be like, well, so why haven't you been doing it? No, they're going to sit there and say, no, it's too risky, or that doesn't work for you, or that's not, because they don't want to look like the idiot that hadn't been doing this strategy for you. So there's no incentive for a CPA to ever, acknowledge another type of tax strategy out there that's available to you, because it's going to make them look bad. And it's not going to benefit them as a CPA. They're potentially going to lose you as a client.
Right.
My recourse, or my flip version of that, of how you flip that on the CPA, CPAs are not expected to know everything. They're just inputting your information. So if you come to them with a tax code, okay, don't tell me whether or not it's a good or bad or type of thing. I just want you to be able to implement this into my tax, my strategy type of thing. So that way they don't feel as threatened of maybe losing you as a client and pushing it back. They're more, okay, yeah, let's see how we can incorporate this. I'll contact that tax attorney and see what I have to do, all that type of stuff.
They don't feel personally attacked.
Right.
So this is interesting, because first of all, the amount of CPAs make good money. And it's a lot of
it's a lot of work for them too. They do a lot of, because you gather all the paperwork, you got to run through it and make sure you catch, any errors and all that type of stuff. So they make, decent money, but it also is a lot of work for them to do one return. So
fascinating. So interesting. Very, very. So I know since the beginning we didn't say what would you call yourself? Now that people got a chance to hear you, you're not you are a financial advisor, but you just didn't want to say in the beginning.
Right.
So what you do is basically a financial advisor.
Right.
And you advise people, or not you, a financial advisor advises people about what they should do with their money, should and shouldn't do with their money.
Well, it's taxes, it's insurance, it's estate planning, it's asset protection, it's investing, is more so of what a true financial advisor should be doing for you.
In your opinion, Patrick, what makes one financial advisor? And here's where my question's coming from. So this pilot I was talking to on the cast the other day, we were talking about pilot hiring at the airlines, and you'll know this. You've been at the regionals, and we're talking about specifically about the majors, hiring at the majors, and we were talking what airlines look for in their pilots. And he said something very interesting, which rings very, very true. And that is that once you reach the majors, meaning you've gone through the regionals, you've flown a jet, you have an idea for, the 121 world. He said the thing that the airlines look for more comes down to the individual and the person and the personality and crew resource management, your ability to think outside the box and work as a team,
right,
rather than actually fly the airplane. He said, when you reach the majors, we can all fly a 747. Let me ask you this. I'm assuming if you lined up 10 financial advisors who've been doing it for 20 years, they can all advise people on their money. What then makes one better than the other, in your opinion?
I don't want to say it's one better than the other. It's the tools that they use to assist you that I guess would make them.
What do you mean by the tools they use to assist you?
Because, so I talked about taxes, insurance, asset protection, estate planning. I can't be an expert in all of those. So I have tools at my disposal that I educate, and then I pass you along to the expert in that specific strategy.
Right.
Same thing with investing. I can't be an expert in all the different investment choices that we have for clients outside the stock market. So I pass you along to somebody who is an expert in that type of thing. So it's not always, it goes back to me saying surrounding yourself and having more than one person educating you on different aspects. So I don't need to be an expert. I have a good network of people that I can help one client succeed in. And I think that is a better aspect. If most clients that want to keep it all in house or only want to focus on, investing and things like that, I said from the top, I don't even talk about investing with clients. I talk about taxes because taxes is the biggest burden out there. One, it's the biggest thing that people do not understand and know all the loopholes that we talked about. And two, it's the biggest thing that I know I can help them on. Okay. Again, I don't file taxes. I'm not a tax attorney, but if I can teach you about certain things and if I can save you money on taxes, okay, my agreement usually is, and I don't make them sign this, but I tell them, if I can save you money on taxes, where are you going to put that money that I save you in taxes? Hopefully you're going to invest it with me, right? So that's where I make the money. It's like, okay, I taught you about this strategy to save you money on taxes. I can teach you about these investment strategies that are, one, going to save you about taxes, two, provide you cash flow, and three, give you appreciation. So if I can do all of that, that's where, okay, if they understand that and get that mentality and that aspect, okay, that's where it kind of opens and sparks a conversation. Hey, why didn't my financial advisor, talk to me about this? Why didn't I know about that before?
Very, very, very interesting. Man, there's a lot to it. Should everyone, Patrick, become financial advisors? It's just like the whole pilot question. Should everyone become pilots?
That's just like saying, should everybody become a mechanic? No, not everybody should become a financial advisor because I know plenty of people where you give them two numbers and they couldn't figure out a fourth number. Like it just, they can't rub two sticks together to figure out, type of thing. It's just numbers are a different animal for a lot of people. So no, not everybody should be a financial advisor. Yes, everybody should take their finances personally and worry about them and think about them and put it on the forefront and, don't just be complacent and, I'm going to put money in my 401k and invest in this target date fund. We haven't even talked about target date funds. Dumbest friggin' thing.
I want to make sure we get through all your notes.
We will.
Okay.
But to just invest, sock money away in your 401k and put it in a target date fund, like that is just not wise. Like to just do a autopilot strategy with your finances is not going to get you out of the rat race, as they say.
So there's so much to talk about when it comes to finances. It's like it's a never-ending. I know I personally have all these things that I'm curious about, and then I'm trying to think what the typical. You'd probably know this more than I do, and I'll ask you that question. In fact, what area do you find most people look for help in when it comes to the financial world? Is it when they're about to start a business and they get lost? Is it taxes? Where do you find most people lack?
They don't. It varies person to person, and they don't go out looking. You have all these things of contact, things like that. And people are not actively looking for a new financial advisor,
which is a whole problem in and of itself.
Right.
So you're not competing for business. You're competing for attention of people to begin with.
Right. I'm competing to get in front of you initially, and then I'm competing to differentiate myself, and then I'm competing to how I can add value. So it's a huge process to really get out there and get people to understand that there's more things to them.
How do you guys deal with the fact that most people aren't even thinking in your direction?
It's, to be honest, for us, for our business model and what we do and how we help clients, it comes from referrals. It's them, two people sitting around a campfire, or like my clients today. I was sitting down with a client and he brought a friend along. And that's how the connections happen, because it's him and I talking about things and it opens up the other guy's eyes, or them sitting around a campfire or dinner table or whatever, and them talking about, hey, my financial advisor told me about this. And it's, oh my God, that would work great. How do I get access to that? How do I do that type of thing? And that's how it kind of snowballs, or where it really rolls for us. And because people are not actively, hey, I need a financial advisor. It's because they don't. I can do stocks and bonds myself. That's what they think about when they think of financial advisors.
So what do you think? is the reason for people not even thinking in that direction? Is it lack of thinking that you could be of any help? Is it's I don't want to spend money on it?
It's for the rich. I don't want, they're taking all my money and not giving me anything. And I can do that myself. Especially millennials now. They're like, I don't, they're just taking my money. I can do that myself. I can go and buy this GameStop stock, or I can buy this Bitcoin, or I can buy, this, and I'm going to make a buttload of money. And in reality, long term, that's not, sure. Short term, great. Long term, that's not how it's going to play out, but they don't realize that. Most millennials don't even realize they didn't have any money invested in 2008,
Right.
when it went down.
Right.
So
Interesting. And the bull run has been since 2008. That's the
2009,
2009.
the bottom, yeah.
Since then, things have been good. Since you mentioned Bitcoin, what do financial advisors think of crypto? Is it...
I don't even want to talk about Bitcoin because you'll get so much hate speech on here, it'll be ridiculous.
from the millennials?
Well, just from there's so many trolls out there and so many Bitcoin people.
But do you know how many? Do you know how many YouTube videos of kids driving Lambos who say I invested in Bitcoin? Come on, how do you?
And how many
knock that
videos
down?
do you see of people who are broke? Have made no money.
It's true,
that
you don't
type
see
of
many
thing.
of those.
Right? Yeah. Yes, Bitcoin has made a lot of people a lot of money. Is it investable? No. Is blockchain the future? Yes. But any crypto out there is still in the range of the pump and dump mentality. You have too many companies behind the scenes putting out press releases, articles on all of these sites that are bolstering up the price, saying, "Oh my God, this is happening," blah blah blah. I mean, take an Elon Musk tweet. He tweets that Doggy Coin, which originally was called, now it's Dogecoin.
Doggy Coin.
Doggy Coin was created as a joke.
Was it Doggy Coin?
I'm pretty sure.
I just know it as Dogecoin.
Yeah.
Okay.
The guy I think has come out and said, no, it was always Dogecoin. Whatever.
Yeah, but it was a joke.
Yeah. But you have Elon Musk saying, well, we're going to take Dogecoin, for payment. Well, that's great. But what differentiates Doggy Coin from Bitcoin? From all these other crypto, there's nothing that differentiates them.
Here's what differentiates them: the public's interest.
Exactly. It's all based on what people are willing to pay for it. And because Bitcoin and Ethereum are the leaders, and they're developing better blockchain technology, which is potentially making them better. And it's why kind of they're still the leaders in things. Everybody else is just generating a coin to try and create buzz and all this type of thing. Is Bitcoin or any cryptocurrency going away? No. Do we still have a cycle to go through? Yes. For most of my clients, I don't even acknowledge or let them worry about Bitcoin because it's too volatile for people who are in that red zone that we talked about. It just doesn't make any sense. If you're a millennial and you want to, play with that, go for it. I mean, you're not my target market anyways for helping you, because most millennials are not thinking of saving. They're just thinking of a get rich quick type of scheme, because that's what's going on. So
so in 2022, what if someone comes to you and says, you know what, I want to get rich quick? Do you not think I'm not saying people should bank on it, but do you not think there are potential ways of a millennial getting rich quick in 2022?
Sure. But I'm not, if you came up to me and be like, hey, I want you to invest my money because I want you to get me rich quick. I want whatever you got to do, get me rich quick. Thank you. I don't want your money.
I gotcha. So if they ask you to help them do that,
right?
But you're saying there could be a way for that to happen in the world we live in.
Yes.
And it happens all the time.
Yeah.
It happens all the time.
Yeah.
Fascinating. Incredible.
I want to go back to the target date funds.
What's target date funds?
So target date funds are typical for a 401k, and this will kind of segue into one of the other things that I wanted to talk about.
Is this just to have an idea? Is this like an area of expertise of you guys?
No,
it's just a general.
It's
okay.
When you invest in your company 401k, typically has target date funds.
Okay.
And what a target date fund is just a retirement year that you're projecting you're going to retire in.
That always interests me. What's the, I don't know if there's an easy answer
Typically
to it.
65. So it's kind of around the 65 range. So they're anticipating you're going to retire 65, 67. You know, it's kind of when you think
And you
you
work
want to retire.
backwards.
But it's typically in 5-year increments. So it could be, 2050, 2055, 2060, that type of thing. And then inside that, they're going to have a stock bond type of ratio. And their thinking is, as you get closer to retirement, you're less risk averse and you want to have more bonds than stocks. The problem with that is, one, look at the year that we've had, and it's another rabbit hole that we could go down, but bonds have been performing poorly.
Right.
So if you have now stocks that have been performing poorly and bonds that have been performing poorly, well, how does that make you any less risk averse than anything else?
Right.
So that's one issue with the target date funds. The second issue is that people independently have different risk tolerances. So just because I want to retire that, year, I might have a lot of money somewhere else, or I might have no money, anywhere else. You're going to have different risk profiles. So that does not, meet you as a person for your risk potential, potentially.
For my needs.
The third problem is they perform horribly. So the stocks that they pick, the return on those investments are way under what the market is. So again, it goes to long-term investing, just putting yourself in the the S&P index fund. They just fees, all this type of thing. They don't make and don't perform the way that they should, and that's kind of in your 401k, in your retirement portfolio. Look at your own 401k that you have at the airlines. What are you in? What are they kind of pushing you? If it's a target date fund, get out of that immediately, because it's not beneficial.
Target date fund.
Target date fund.
And that basically makes the investments on my part more or less aggressive depending on how far out I am from
your retirement
my retirement date.
The closer you get, it starts to manipulate the portfolio
to make it less aggressive.
Correct.
Because I have less time to recover.
Correct.
I gotcha.
Is the thinking behind it, yes.
I gotcha. Interesting. So why would that not be good? Why would I not want that?
Because like I said, in a year like what we're having, stocks are going down, bonds are going down. So now your overall portfolio is still going down. You're not.
Interesting. So you're saying rather than the aggressiveness on my investments be based off how many more years I have between now and retirement, have the aggressiveness on my investments be based on reality?
Right. Or your own specific, risk profile.
Very interesting. And you found that overall doing that, meaning bouncing based off reality rather than how long I have before retirement, overall works to the benefit of the individual.
Yeah, if the automation does not benefit, the investor.
Fascinating. Very, very, very interesting.
And especially with that those target date funds are just for the group that puts them together. They make the money.
Very interesting. Let me ask you this. What would you tell someone to be a good first step to getting out of this financial hole that most people find themselves in? Really, it's not a hole. It's just, like we said, it's pure lack of education. I'm talking on behalf of myself. You talked on behalf of yourself until you met this guy. Nothing will change until the cycle's different. But we could work with what we have. And what we have are many people out there, smart people, motivated people, could be successful people who just don't know about money and about any of these things. Mm-hmm. What would be a good first step in order to, like when you're trying to convert someone, you don't want to go 0 to 60 what's a good get your feet warm, get them in the swimming pool? What do you think's a thing that someone could do to start itching in that direction? What is it? YouTube? I hear people say stay away from YouTube because you have 20 opinions, you get confused.
I wouldn't say that. I would say wake up to the fact that there's more information out there than you know. If you listening to people on YouTube is how you want to do it, fine. But don't listen to just one person. You have to.
So you say the opposite.
Well, it's not necessarily. I'm not saying go to YouTube, because I do see what they're saying. There's a guy who has millions of followers. He got his start way back in the day in real estate. He's here in California. Got his start way back in real estate, and great for him. As a young kid, he got hooked up, however he did it, but now he's worth a buttload of money. My problem with that is that now he's giving financial advice to other people.
I think I know what you're talking about. Is he a big car guy?
I don't think so.
Okay.
I don't know. I don't really watch his videos.
Got
I've
it.
just seen clippets where he's giving, financial advice on this and on this and on this. And my issue with that is that, okay, yes, what he did worked for him. What the area that he's in is a good area to be in. The problem is that he really has no idea what he's talking about beyond that. Like he got lucky in some aspects. He made his money, things like that. But that doesn't give him the credibility that he knows what he's doing and can then go out and teach other people, because that's not going to work for everybody that's out there. It's got to be very specific to what you're doing. So my thing is yes, maybe watch his channel and learn about, okay, hey, yeah, he made money here. Great. That's maybe something I'll look into. Watch another video. Hey, they're doing this. Okay, that's interesting. The thing is when you get down into it, YouTube's only going to take you so far. It's only going to give you scratch the surface of the options out there and the potential that's out there. You have to really go deeper than that to learn how you can do it yourself. And YouTube is not going to teach you. They're not going to give you the secret sauce. All those videos out there of, these people driving around in Maybachs or Maybachs or however you say that car name, or
Maybach.
Maybach. The jets, and they're saying, sign up for my education course, and I'll teach you.
You could rent those things.
Yeah, that's not the way. You're not going to make money doing that.
But you can't rent good looks.
What good looks?
Patrick.
So that's those type of YouTube things are just asinine. You're throwing your money away.
I'm with you. Yeah, I mean, we live in a day and age. Shit, you could, probably. I mean, you could stay in we're in LA. You could rent a Lambo. You could rent anything you want, and you shoot video with it, and nobody knows anything.
Right.
But that's back to what we said. We live in a world where, listen, appearance. Actually, we didn't. I said back to what we said. I was talking about it with someone earlier. We live in a world. I was talking with someone about like Cirruses and Cessnas. We live in a world where ramp appeal could and the paint job could very well talk louder than many other important things about an airplane. And I think that's true across the board. We live in a world where people are very surface level.
When you look at people who are truly wealthy, and there's a difference between rich and wealthy. When you look at people who are truly wealthy.
Before you move on, how do you define the difference? I heard many people define it differently.
You're
about to.
Yeah.
Okay.
People who are actual wealthy, they don't flaunt it. They're not out in the expensive ass cars. They're not out they have maybe it, but they're not out flashing it around, putting it on Instagram, doing that type of stuff. They're not out boasting that they're rich and throwing around money and people that are truly wealthy understand how they got there, what it means. And yes, they have money, but they're not out throwing it around and flaunting it and all that type of stuff. I have so many clients that are penny pinchers. They have so much money and they're penny, they pinch every little dime and things that come out. They understand it. And the generational wealth people who have had it handed down to them and they've been taught correctly how to, utilize it, grow it, all that type of stuff. You don't even hear about them. The people, Jeff Bezos and Elon Musk, they're not the richest people in the world. They're just the ones that you hear about because they're in the news and they own stock and all that type of stuff.
This is big. So wait a minute. So you're saying that Elon Musk and Jeff Bezos are not the richest people in the world?
No.
They're just the reported richest people in the world.
Right. And they're the phantom, because the stock, Tesla is $10 billion market cap, whatever, it is today, who knows. That doesn't make them wealthy because they can't just turn around and sell all that,
right?
And go around and spend it or do whatever. It's the people who are generational wealth in the background that you don't hear about, that you don't know about, that really are the wealthiest people in the world.
All the rich families,
right?
The families that you hear about.
Yep.
They have a lot of money.
Yes.
And it's generations.
Yes.
And it's growing.
it's in everything and expansive and all that type of stuff. Yes.
Fascinating.
Yeah.
Let me flip the question around. I asked you before, what could everyday people do to get out of this financial hole?
Mm-hmm.
Let me flip it around and ask you this. If someone's watching out there who says, I want to be a financial advisor, maybe they think they have a knack for it or whatever.
Nobody's gonna say that.
Why not? You said that.
Yeah, you don't. I don't think you really grow up,
Not
thinking
growing
that you
up,
want to
but
be
not
a
grow-
financial advisor.
not
or
growing
you're
up.
like,
Let's say they're 20 and they just talked with someone and they go, you know what? Maybe they're excited about this financial stuff and they really want to help people. As someone like yourself who's gone through the ringer, right? You talked to someone, you got inspired. You said, I want to work with you, and today you're helping people. Looking back, what would you tell someone in those shoes to do or not do in order to...
read.
Ooh, what do you mean by read?
Read everything. Every type of financial book out there. I mean, I would say that 50% of my day is reading.
To this day?
To this day. It's because knowledge is wealth. There's so much out there that I still don't know, that I can utilize or grasp or understand to learn my clients. I was taught another tax saving strategy by somebody else in the tax world that I have, that I want to learn about. I want to see if it can actually benefit my clients. I want to see if it works. I want to see what the potential is behind it. So there's so much information out there, and you're not going to get it by somebody talking it to you. You got to read it and understand it. And there's so much print material of generational type of knowledge that's out there. And yeah, I would just say it's a constant reading, and you're never not learning in this industry. If you truly want to know everything or like expand and help your clients, you're never not learning. You can't. I mean, these people who are 60 years old sitting behind a desk, they're just collecting their assets under management fee. They're not doing anything, to really help their clients at this point.
So in a weird way, one way of answering, if I asked you, what do your clients pay you for? Another way of answering that is they're paying me to be the dude who spends half my days educating myself on ways to help them financially.
I guess.
That's another way to look at it. I never thought of it that way.
But I mean, it's not, and that's where it's why there's an industry. It's when you think of car mechanics, when you think of, grocery stores, all those type of things, you can't do it yourself. So you're paying somebody to kind of do it for you. And that's more of a true financial advisor. Yeah, you're paying me for exactly like you said, to make sure that I'm learning about all the different strategies, topics that are coming out. 2022, we released a report on 2022, just all the tax changes, that are simple. Like you can contribute more to your 401k, the new RMD requirements for how much you got to be taking out of your retirement account now if you're over 72. That kind of percentage has changed. It was a whole pamphlet that we released on just those type of changes that happened in 2022. So it's always evolving. It's never a stalemate type of situation to where there's not things changing in the industry.
What are some red flags that someone should walk away from their financial advisor from if they come up? When do I know that my financial advisor sucks?
If they're only offering you, stocks, bonds, mutual fund and annuities. If they ever say that there's no fees associated with this.
Here's the reason I'm asking before you answer. The reason I'm asking is because I think probably some people, not all of them, the reason why they aren't out there looking and doing it and involving someone who knows about these things in their finances is because, like we said before in the beginning, they feel like the financial advisors are just out there to get them.
Mm-hmm.
So what if that's the case? What if someone does come across someone who's out there to get them? What are some things that people could look out for?
Well, it's more so you ask them, like, what are your fees? How do you get paid? Have them, them structuring a portfolio for you is not going to be advantageous. What type of investments do you have and do you offer? And what are your, time frames? The typical questions I get asked are, what are your minimums, or, what's your return? Show me what your return has been for clients. And anybody that asks me that, like, what's your return?
You hate that.
I don't let them become my client.
Right.
Because it's not, one, it's not about that. Two, well, it is about that, but it's more so it's the individual.
Right.
Because everybody has different risk tolerance. Everybody has different return potential. Everybody has different, thought process of what they need and what they want. So I can't lump them all together and say, or just give one specific example, because I could skew the numbers.
Right.
If I put a return potential where I made a client, 20% that year, okay, that's great. That worked for that client, but their risk profile is different. Their what they invested in is going to be different than what you're going to invest in. So that alone is, if you're only looking for, make me the most money and the shortest amount of time, that's not going to work for me, because those are the ones that I'm going to have to deal with on the phone when shit hits the fan, per se. And any investment has risks. I can't guarantee anything when it comes to investing, because you're investing. It's going to have risks. Things are going to happen. And that's why we stress the diversification aspect of it. If I put you in 10 different things, I will tell you straight up, one or two of those things are probably going to fail or not going to work out the way we had planned. But that's why we're in 10 different things. If I knew what was going to pay off and what was going to be the best thing, I'd put all your money in that. But I don't. So I'm diversifying by letting you know that I know the only guarantee there is in investing is that something will go wrong. So I know that something's going to blow up. So that's why I'm spreading stuff out. And anybody that guarantees you anything or tells you that they can make you 20% year over year,
Red flag.
I've been doing it. Yeah, that type of stuff is not good.
How do you, Patrick, deal with someone who trusted in you, in your expertise?
Are we getting granular now?
we got to get the radio voice of this one.
Oh, yeah.
How do you deal? Certain questions, they got to get closer to the mic. This is how it works. I'm telling you, certain questions, you got a certain distance. It all comes together. How do you deal with, I don't know if you have, we just talked about 13-year bull run. How do you deal with someone losing money under your watch?
Like a client losing money?
Someone who trusted your expertise and money was lost, because you said out of 10 things, 2 will go down.
Mm-hmm.
How do you deal with that with a client? I don't know if it happened to you or not.
It's not necessarily me dealing with it. It's me managing their emotions. But that's why, I don't. It's not like I say I told you so, but it's for me it's easier when it happens because I've prepped them for it.
So it's in the prep work,
right? And like I said, everything we have an investment that is struggling right now. And I called the client, told them that it was struggling, what was going on with it, what the situation is, and that was pretty much the end of it. And that's kind of the norm of what is going on. You gave them a
heads up.
I informed them that, it's not doing well, it's still in the early stages, we'll see what happens type of thing. But they know, and I remind them, this is why we diversify, this is why we have other options, things like that. So in reality, if they lose it, the other stuff that we've done makes it up, but we haven't lost it yet, but it's still the early stages. And that was kind of, they just moved on, type of thing, because they know that it's going to happen. And if we spread it out enough, there's going to be things that just don't work out. Interesting.
So you find, you're saying that by giving the client a heads up, they appreciate that more than you not.
Well, they still forget,
Right.
It's what have you done for me lately, no matter what you do for a client. But it does make it easier that you tell them up front that things are going to, it's investing. There's risk. Everything has risk, time frame risk, return risk, principal risk. And it eases the blow for when the potential does happen. And when the other ones, I might have one that is struggling, but I got 3 others that are, blowing the doors off. Well, that makes up for that one that's struggling. So
and that's where diversification comes in.
Right.
I gotcha. If there's one thing you could get schools to teach about finance, what would that thing be?
Debt.
I like that.
Because we're taught growing up that debt is bad. And debt is bad if you don't do anything with the debt.
What do you mean?
So credit card debt is the biggest killer. Car debt, things like that, because they're depreciating assets and stuff like that. But car debt is depending on the rate, if you're not paying anything, then it's free money type of thing. But debt is not all bad. It's in flat across the board is not bad. Debt can be very valuable to you as a business owner, as a wealth building tool, as just to get by type of thing. So most people want to pay everything off because they don't want to have debt. But if you can make money on the debt that you take out, then it's not bad. But if you're just taking out debt to go and buy a new pair of kicks or a new cell phone or whatever it may be, yeah, that's stupid. But if you're utilizing debt properly, debt is not bad. Now, over-leveraged debt is bad, and it can cause problems. But if you're utilizing it properly in the way it's meant to be utilized, it's a great tool.
That's so true. I mean, there's so many people who think debt is flat out bad. There is bad debt, but they see it as flat out bad.
Yep.
They see it as how do you go about? Is there a way to distinguish? I mean, I guess that's where education comes in. How do I know if a debt is good or bad for me? That's where reading, and that's where educating yourself, and that's where reaching out to people like you comes into play to say, hey, this debt is something not only you could afford, but you should do in order for.
And that's all the numbers. You have to run the numbers to see if the debt is going to benefit you or not. Because if you take out debt on something and move that money to go and do something else, if the debt is not making you $1 more
than what you're paying
what you were paying for it, it doesn't, if it makes you $1 more, then it's good, potentially still, because you have to dig a little deeper. Okay, if this goes bad, now is this out to dry?
Right.
That type of stuff. But if you're pulling out debt and you have it covered and all the pieces work and it's making you $1 more than what it would have if it wasn't, it's
kind of worth
debt.
it.
Yes.
It's kind of worth it. It's good debt.
Yep.
So you would teach that. That's fascinating. You would teach that in school. Man, it's crazy. The more I talk about these things, the more I sit here and I go, how backwards we have it. And at the same time, you know what, though? People like you would probably be out of a job if everyone knew everything they should know. Think about it. What would you be able to offer someone if they knew it all? If they learned it, if they learned all this in school, what would they come to you for?
Well, if everybody learned it all, we wouldn't be in the situation that we're in.
Exactly.
Would be,
so people like you should love the fact that it's not taught in school. It's like I love the fact that people don't learn how to fly in school. They come to me.
Right.
You know what I mean?
The thing about the school, it's still backwards. I said that it takes somebody to want to go and do that, and most people are not because it's not worth their time. When I was first starting out, I had a room of principals that I brought this attention to and talked about, and at
a school.
It was in a chamber of commerce room. So a room full of principals, laid it all out there, taught them, hey, I'm willing to offer a class for you to have, because it was potentially a benefit for me. If I go out and teach these students, this type of thing, they're going to take it home to their parents and be like, hey, I learned about this. Oh, well, who is that? Let's go talk to them, see what it is, type of thing. I had so many principals come back up. Yeah, I'm interested in that. Let's talk. Let's do that. And then it went away. They just gave up on it because, one, funding, two, time, an effort of their time to try and organize and put together things like that. And I was offering to kind of do all that for them too. It's just they have different nuances in the school system that is putting a kibosh on it, and they're just not able to. They have other things pulling their attention that they can't devote enough thought to even do it for a fully funded, time, all that type of stuff. All they would have to do is give me a classroom, and I couldn't get them to commit. So it's bigger than just the finding somebody to do it. There's just other forces, other powers going on at work within that it's, I don't know.
What do you tell the person who is 60, who never looked at their finance? They have nothing right. Do they still have a chance, or is it too late?
Depends on the person. Like you can't
situation
take it.
By situation.
Yeah, you can't. And that's the beauty and why I like this industry, is because every person that I sit down, it's a new experience.
Completely
It's
different.
a new experience for them. It's a new experience of, okay, I can teach you about this that you didn't know about, things like that. We can go down this route, all that type of stuff. So it's very granular in the fact of every person is different in what we can do to help them out. Now, obviously, there's still things that, overlap between people, and everybody has a little bit of something, but it's, what they did their entire career. One, that's interesting to me. It's kind of like doing a personal podcast. I'm learning about them and learning about what they did, how they earn their money, all that type of stuff. And then we're going down the road of what we can do to put the pieces in place.
Would you say all financial advisors are like contractors like yourself? A contractor basically brings the plumber and the electrician together to the job site. It sounds like you basically described yourself in a similar way. You know a bunch of people who know a bunch of things about different stuff, and you're able to source out to the people who know better than you do about specific topics. Or would you say most financial advisors are that, or that's what makes you, Patrick, unique?
I think that's what makes us,
unique.
Yes.
I love that.
Yeah.
So that would be a reason, in the name of wrapping this whole thing up. Back to
done yet. I got another topic I want to talk about.
Pull up your notes.
I don't need to pull it up. I know.
You already know what you're talking about. But that would be. So back to my question: what makes one financial advisor better than the other potentially?
Mm-hmm.
Is what we just discussed. Is the fact that you aren't someone who claims to know it all.
Right.
You know your strengths. You know your weaknesses, and you know people who make up for the weaknesses.
Well, but every financial advisor could do that.
But they don't.
It's just whether or not they do it. Because, if I send you to a tax attorney, I don't, that doesn't benefit me. Other than, for me, it does because I see the value in it. But if I send you to a trust attorney to make sure that you have a trust instead of a will, it doesn't benefit me.
What's the difference between a trust and a will?
A trust avoids probate, a will doesn't, is the simplest way to put it.
I still know nothing about. I still know exactly as much as I did a second ago, even after all those words.
So, a probate is just if it goes to court. So you die, all your assets now need to go and be evaluated by a judge, and then
with
a
a
judge.
Trust.
No, with a
will.
And then a judge determines whether or not who gets what based on the will and the validity of the will and all that type of stuff.
So even if in the will I say I want my daughter Ivanka to get all of it,
it still has to be determined by the judge. Yeah.
Then what's the point of writing a will?
He'll confirm the validity of it and be like, okay, these are his wishes. Yes, I
And the judge
agree
decides how many of my
decides.
wishes will be honored?
And from that, court fees comes out, lawyer fees comes out, all that type of stuff.
Dude, it's a business.
It's a racket, yes. So that's where a trust just avoids all that. Because you've been already verified by a lawyer, it's a big scam. It's the same thing of
it's a scam.
Yeah, not a scam, but it's a way for attorneys to get more
more money
and
more
stuff
work.
like that. But we have trust attorneys that can set you up a trust much cheaper than most trusts will set you up.
So the difference between a trust and a will is in both cases, I write out how much I want my daughter Ivanka to get.
Mm-hmm.
If it's a will, it goes through a judge who decides ultimately what happens.
Right.
But if it's a trust, it doesn't even reach the court.
Right.
And my daughter Ivanka gets it straight off the bat.
Right. Avoiding all the fees, avoiding all that type of stuff.
And the reason it's that way with a trust and not a will is because I went through the process of paying money for the trust.
You still could go to an attorney to write a will. It's just the way the trust is structured and recognized in our financial system. And again, I'm not a trust attorney, so there might be more to that aspect of it. I've never really dug down that. I just know that depending on your assets and your situation, a trust might be beneficial to you. So there might be more legality things behind it because you have that trust is now on the name of all your investments. It's on the name of your documents, where a will is not. A will is just you keep it in your file cabinet, and then when people die and they're going through your stuff, they're pulling out the will and be like, oh, okay, these people are supposed to get this, but it has to go through court then.
So does a will have to go through court, or is that only if we fight and end up in court?
No, it doesn't matter. If you don't have a trust, your assets, other than your IRAs, Roth, 401ks, all that type of stuff, that doesn't have to go through court. But any asset outside of it, if you just have a will, it has to go through court. It has to go through probate court.
That is fascinating. I had no clue.
Yep.
I did not know that.
Yep.
What's the other thing you want to talk
The
about?
last thing that I wanted to do, and you can push this off in a little, I don't know, commercial type of thing, but
What do you mean push it off? Push it
well,
off?
just make another segment potentially, or in this too. But I wanted to talk about, for anybody out there that is a small business owner of 5 or more employees, the state of California is now, we say mandate because that's what the state of California is using, but it's really a law that if you have 5 or more employees, you have to either offer a 401k, a retirement plan. It doesn't have to be a 401k, but some type of private retirement plan, or enroll them in the state-run Cal Savers program.
What's that?
So Cal Savers is a spinoff. It's out of 2016 legislation, where the legislators feel that minorities or most people are not able to contribute to their 401k. So their solution is to put the problem on the business owner and make them auto-enroll them or enroll their employees in the Cal Savers program so that they can invest in a Roth IRA. Well, a Roth IRA is, you could do that on your own. You don't have to do it through the Cal Savers. You could go out and get that on your own without Cal Savers.
Right.
So it's not beneficial to the employee. It's state-run and state mandated, so it's more money that's going to the state. Well, we saw how that works with Caltrans, with DMV, with all those type of things, CalPERS. It's mismanaged funds. It ends up being, but it's state-run, but it's privately invested. So there's private investment firms that take a management fee off of target date funds. So we already had the conversation about why target date funds are bad. Now you have these private firms that are making money, almost 1% off of all the assets that get funded into these target date funds, which really do not take any management at all. So it's free money for these private firms, and then they're mandated. So it's small businesses that have to go and register on the CalSavers site to put these employees on there. So we're trying to get the word out. We're trying to emphasize the other options that are available to them, because 401ks are typically thought of as very expensive, very cumbersome.
Expensive to set up?
Right.
Really?
They're not anymore. They used to be, but now for a small business owner, they're very cheap to be able to set up, and it's automated. It's seamless.
So as a business owner, and that's the other thing, I tried setting up some stuff, as you know, in my life, and just the online process. You say seamless because these things, the lack of education, these things seem complicated for someone's perspective who doesn't know anything about it.
Right. And if you were to go out and try and do it on yourself, like the Edward Jones, the big box houses, they have it too to make it easy. But again, you're paying fees. There's there's fees with any of them, but you have limited options when you do it. Whereas doing a private 401k through a smaller firm, you have more options. It's better for yourself, and it allows you as a business owner to be able to actually save for your own retirement. Because typical business owners, they struggle to save because they don't know some of the other options that are out there and available to them as well.
So the requirement, if I have 5 or more employees, I have to set up some sort of retirement plan. Let's say I'm setting up a 401k. I do not, however, have to set up a minimum match.
Correct.
So I could match 0.
Right.
I just have to have it in place.
Yep. You have to have
for
it
my
in place.
employees
and
to
you
have the ability to contribute.
Yep.
They don't have to contribute.
Correct.
I just have to make it available to them if they choose to.
And it's the same thing on the Cal Savers side. You have to enroll them in the Cal Savers side. If you don't want to do the private side, you have to enroll them on the Cal Savers side, and then you got to auto enroll them. So the employee has to then go in and enroll out if they don't want to save for it.
And that's how it's a solution for them saying that we don't have what to invest in.
It's a way of, again, it's putting the problem on the business owners, just like everything California does. It puts the problem on the small business owners in the state. So it's just a way to help employees save for retirement, when in reality it's not doing anything for them. I feel like it's a way for whoever these private firms are to get more money.
I feel like
another way for California to get more money.
I feel like you're almost like a politician who can't really express your opinion on the matter. You could only share the information.
Well,
but we won't be able to get out of you any. Where does Patrick sit with this? So let me be the one who says, "Ugh."
The deadline for this is June 30th. So small business owners have until June 30th to do one of these things.
Or
And
fire one employee if you currently
or
have five.
fire one employee, yeah, or not hire. And then after June 30th, if you haven't complied, the state is planning on fining the small business owners.
Wow.
$250 per employee. And if by the end of the year you still haven't complied, they're going to tack on an additional $500 per employee. So
You guys heard that.
it's something ridiculous that they're doing. So we've put together resources. We've tried to stress it to get business owners to make sure that they don't get hit with the fine and that they can comply and all that type of stuff. Even if they don't want to do a private plan, we have resources to help them, guide them, and walk them through the CalSavers kind of setup. We called CalSavers to try and get information and help through it's what you would expect when you're dealing with a government organization. It's awful.
So
It's just an awful experience.
your firm, what's it called? Is that the
Quiver
show?
Financial.
Quiver Financial. That's a firm?
Mm-hmm.
So your firm, if I'm a business with 6 employees and I want help setting this up, your firm will help me?
5. Well, it's 5 or more. So even if you have 4 employees, you're technically considered an employee as well.
So
So
I'm
if
5.
you have 1 plus 4 other people, you're required in this.
And
mandate.
so if I want help in setting these retirement stuff up
Mhm.
and I know nothing about it, you guys do that.
Right.
It's a service you offer.
Yes.
Okay, so Quiver, let's get plugging stuff.
You wanna-
let's get let's get telling people where and how they can find you. So if anyone out there is anyone really, right? You said you'd work
Fiverr.
with anyone.
Right.
Right,
But
you'd
we're
work-
pushing we're trying to get the word out more so for this because we're trying to get them to avoid fines because it's as simple as you
Yeah.
reach out to us, we register your organization on CalSavers, and all your employees opt out. I mean, it can be that simple. We will help businesses with
And
that
you
because
say-
we don't want them to get fined over this stupid law.
Oh, so okay, this is a piece I missed. So I don't have to do it if all my employees opt out.
It's down to the employee, right? You have to, as a
Oh.
business owner, you have to take time to go and register you got to create a CalSavers page.
I need to give my employees the opportunity to opt out.
Right, and then you need to register all your employees, and then it's up to your employees after that whether or not they want to participate. So that's the simplest way to do it. You contact us, we help you because you have a business to run. You don't want to be spending time on this. But what's going to end up happening is because of this mandate, there are going to be some companies that offer a retirement package.
Right.
And that's a way to incentivize because we're in the, great resignation time period of employees leaving, going other places, not working, things like that.
Exactly.
You need to differentiate yourself. So it's going to start to snowball to, okay, I'm working for a dental office. Okay, there's another dental office over here that's going to pay me the same salary plus a 401k option. Well, what are they going to do? I'm going to jump ship and go to the 401k option, right? Because it's more money in reality.
Right.
So it's going to come to a standpoint of that situation. And like I said, 401ks are cheap now for the employer to set up and operate and run. And to be honest, I would say almost 50% of that is tax deductible in the first 3 years when you set up a 401k. So it's seamless, it's cheap.
So you won't
and
even
all that
pay
type of stuff.
anything.
Right.
Well,
You'll still pay.
you will pay, but you're not
but it's
paying it to
much
taxes.
cheaper,
You're
right.
paying it to set up your 401k.
Right.
Incredible.
Yeah.
Wow. Okay. So where could we'll include things in
Quiverfinancial.com.
we'll include things in the description of the video.
Yeah.
You'll send me stuff to include in the description. Where could people find you?
Quiverfinancial.com. And you
Spell
just click
Quiver.
on
Spell Quiver.
Quiver.
Quiver financial.com.
Yeah. But
And-
you got technical skills. Come on, you can put that
I'll
down
put-
in the little.
I don't know
little
technical. Okay, so Quiver Financial. I like it. So you're in LA. Any reason for people outside of California contacting you, or
Not yet. It's in the Build Back Better plan.
what's that? Build Back Better?
Yeah, it's one of Biden's spend more money type of plans, but it's in there to where they're trying to roll it out nationwide. They've put it on hold because the midterms are coming around, but after the midterms are over,
Put what nationwide? This requirement for retirement?
Right.
Oh, it's just California.
right now it's just a California law, but they're trying to get it to roll out nationwide.
But your firm could help a business in Arizona.
Yes.
I gotcha. So once it is required nationwide, they could still reach out to you.
Yep.
Now you can't just help.
And
California.
even we could still help them now.
Got it.
It's not a nationwide requirement, but if they're looking to set up,
Got
a
it. 401k
or whatever, yeah, it's still nationwide. It's still cheaper.
Got
to
it.
do now.
So I want to end this with I really am passionate. I mean, you and I talk so much off air about these stuff, and there's so much about this financial world that just drives me nuts because it's so confusing to me. It really is. It's just I think of myself as not a dumb guy. I won't go as far as saying smart, but there's so much to it.
Yep.
For no reason.
Nobody else is out there dumb when it comes to it.
Right.
It's the lack of being informed to
Right.
it. You know, we talked about before there's two different tax codes out there.
Yes.
There's the informed tax code and there's the uninformed tax code.
What do you mean by that?
So there's the people who are just doing their taxes on a regular basis and just let their CPA handle it, input the numbers, all that type of stuff, because they don't know what things they can be doing to help reduce their tax bill. So the informed people are using all these loopholes that are given and granted to them by Congress that are legal. Now, I'm not saying tax evasion. That is different than utilizing the tax code to your advantage.
Utilizing tax loopholes is 100% legal.
Correct.
Yes.
And they call them a loophole, but it's not a loophole.
It's just a way
the tax
out.
code, utilizing the tax code.
It's utilizing it to your advantage.
Yep.
So you're saying there's an informed and uninformed group of people.
Mm-hmm.
And your job, here's another way to slice what you do, to take someone from this side of the fence of the uninformed and make them informed.
Right.
It's another way to slice
And
your
it
job
doesn't even
description.
have to be that. It's to educate them enough to that they go and hire somebody that can do it for them.
Cool. So let's make it as easy for people watching this right now. Let's say someone's watching this right now and they go, God, Patrick sold me on who he is. I think he's a cool guy. I don't want to work with him. How can he reach you other than, or did you just want them to go to quiverfinancial.com?
You can go to quiverfinancial.com
and I'll include that in the description.
And reach, yep.
And then they'll be able to reach you.
Yep.
And you said you don't have minimums.
We don't have minimums.
So if someone's out there going, I don't have $500,000, I only have $100, still reach out.
Right. If it's not, it's about you learning. If initially, we're not going to talk anything about money. You know, you reach out and be like, hey, I want to learn how you can save me in taxes. Okay, great. We have a conversation about that. It's not like, okay, we have a conversation and then, okay, you got to give me $500. You got to invest this.
And you will take the time to talk with the individual.
Yes.
As I know you have with me.
Yep.
So I know that's actually the truth. Yeah. You're not just the guy who that.
Right.
Incredible.
Yep.
Wow. Are there any other notes that we haven't discussed?
Nope. I think that was it.
Is there anything you want the world to know about finance before we wrap things up?
Not all financial advisors are created equal.
Okay. So that means
we kind of already talked about.
You talked about. So you're saying some are better than others.
Right.
They're
not just for the rich. They're not just to take your money. Yes, some are, but give them a chance. If you truly want to expand your wealth, you need to be reaching out to a financial advisor. If you reach out to them and they're like, yeah, well, what do you do in stocks and bonds? Then yes, hang up the phone and try another one. But there are financial advisors out there that can guide you and help you and assist you in the investment world.
Love it. Patrick, I'm sure there's a million questions that we haven't talked about, a million things we haven't talked about.
Well, if you get anything in the comment section,
you'll come on again.
Yeah, or if you get anything in the comment section, send them to me. I'll give you my response, and you can throw it on the
Incredible.
in the comments.
Patrick, thanks for coming on. Thanks
Cheers.
for doing it. Cheers. Awesome. Good talking with you.
All right, thank you.
Fantastic.